Welcome to TMS Insights, right in the middle of reporting season for August, and it's been a hectic week of reports. Ben Clark and Jeremy Hook bringing you some of the best and some of the other ones, and a bit of a guide to what we've seen, one of the themes. Ben, overall, one thing we've certainly seen this week is ridiculously large reactions to results, whether they be good and the market liked them or whether they be bad and the market didn't. The moves have been big, and often they turn around the next day.
Unbelievable. I just think there's this growing sense that computer trading is really taking over the market, and I think we're seeing some wild reactions from computers, and then the humans are stepping in and adjusting prices to where they should be. But we've heard a number of companies present this week where we've sort of hung up and thought, not bad, share price is up 13%. And then we've heard others where we thought, that's a great result, share price down 20%. It's been quite extraordinary.
So it certainly creates some price action and opportunity often, but not always easy to be right on the spot with some of those.
No.
But overall, again, continuing our theme from what we said last week, we've been pretty pleasantly surprised by a lot of these results overall.
Yeah, I think it's still, like, across the market as a whole, I think it's the earnings are coming through better than expected, but still it's a tough grind out there. But I've got to say, I think the companies that we widely hold, particularly the larger weightings that we've got for a lot of clients, have reported really good numbers in quite a tough environment. So been pretty happy with it. Knock on wood, we've still got a week to go, but so far so good.
Exactly. Altium has been a very well-performed stock for a long time. Its result on Monday was again confirmation that things are going very well at Altium.
Yeah, these technology businesses, they've had some pretty wild reactions to their price. I actually thought Altium's result was actually a slight miss versus expectations, but an incredibly good result, and the share price jumped. So go figure. But the CEO is building out to his long-term goal and is incrementally, continually making progress every time we hear from him. And there's a great growth story there if he pulls it off.
Yeah, exactly. Lend-Lease reported, messy sort of numbers in a lot of ways. Some confidence signs. The engineering and construction division is something they won't be worrying about soon, so that's good news.
Yeah.
Any thoughts on Lend-Lease?
I think once that separation occurs, we sort of believe that there might be some value there. I guess the good news in that result was that there was no more bad news from that engineering division. And they're trying to obviously offload that. The core of Lend-Lease will probably become a much higher quality business. They won that big Google contract before the end of the financial year. So you can see the direction they're heading in. And, this engineering and building construction is very hard to invest in, I reckon. We've seen a number of companies who have had big issues in recent times.
Definitely. BHP Billiton was Tuesday. Another very good result, but well signalled, so it didn't excite the market.
Yeah, and probably a bit overshadowed by what's going on in iron ore at the moment.
There's just been a lot of selling, obviously, in iron ore, and BHP's price has been under a little bit of pressure of late.
But the dividends are still incredible. This is actually one of the best yield-paying stocks in the Australian market.
Absolutely. So still very happy holders of that. Look, Seek's a company we love talking about after reporting season. We always love to see the way they perform. Again, Ben, great hearing the Seek call. The thing that we really got a new sense of is how aspirational they are over a 5 and more year time frame. So it was good to hear that aspirational level. What do you think of the Seek result?
Well, the result itself reflected what Seek's been doing in recent times, which is great revenue growth but no profit growth, because they've been pumping all the excess revenue back into investment. So I think there's been a growing sense that shareholders of the market's got a bit frustrated that they're not seeing the profit line running. But Andrew Bassett, I think, sort of offered a bit of a grapevine today, or a couple of days ago, where he has given the market some sense of where he believes the market could get to, or the company could get to. He delivered was given a $5 billion revenue aspirational goal by 2025. Just by way of context, they did $1.57 billion in revenue last year. To me, I love seeing stuff like this because we don't, the market doesn't think 5 years ahead. It thinks 5 weeks ahead. And what I do know is that if Seek get close to that revenue goal in 2025, the share price is worth a lot more.
Correct.
What it does between now and then, there'll be periods to buy it during that period. But I'd be this is a business we really liked some years
Absolutely.
ago. I think it's probably coming up to the top of the list again for me now.
Yeah, no, it's really exciting to hear that. Not many, like you say, not many companies have the tenacity to say that and then deliver on it, and they've done it already. So.
Because most of them don't have a CEO that you know is still going to be there in 5 years.
Well, that's right. It's a revolving door, and not at Seek though. APA is one we've liked for a long time, Ben. Numbers generally don't surprise on APA, but it's in terms of the yield plays and things like this, it's looking attractive, isn't it?
Definitely. And Cube is another one that's had a pretty good set of numbers results, today. Yeah. These infrastructure stocks with bond yields where they are, the reliability of them sort of shining through, and it's what people want at the moment.
Now, car sales is one we've held for a long time too, and the call was a positive one about a good set of results. But the share price just took off. Yeah.
Which is surprising. One area that's been really good has been the car area just generally. The big vehicle leasing businesses, Macmillan and Smart Group. So, what's happening here is we've gone through a really tough period of car sales, but the market is looking a year forward, and with low interest rates and house prices are about to run again, we're going to start to see it pick up. And you get the sense that these companies, they can see a pickup coming and they're getting a bit more bullish. But car sales, the South Korea sort of story.
Well, that's the thing that's dominating, isn't it? It's the offshore story, which is like Seek. Increasingly, we'll see that at REA, I think, in time as well. But those, online classifieds businesses are all doing very well.
Absolutely, and dominant market positions in big growing economies where they're just starting to go through the transition we started 15 years ago. Yeah.
One business that's dominant in the space is WiseTech, and its call confirmed how strong that recurring revenue stream is for me, that when they sign on, they get 99% recurring. It's pretty amazing business, isn't it?
Yeah, and each additional year, customers tend to spend about 20 to 30% more revenue on the platform, and there is no one else trying to emulate what WiseTech have done, and I think they're so far ahead now that there's never going to be anyone that will emulate them. The issue with this business is, of course, just how do you price it? It's such a huge potential for the company. It could become the Google of the infrastructure space in some time, but you're paying 100 times earnings for that now. So as we've seen with our team and as we've seen with a lot of the WAC stocks, when these stocks can very rapidly have 20-30% price adjustments, but the long-term story is there with all of them.
It is,
and that's the time you get keen on them, probably not at the moment.
Yeah. Qantas reported, Nearmap, IMF, the Flight Centre, some good high-quality names in that group. Nearmap's price has been pretty lofty, so it pulled back a bit on its result. Qantas is one that's taken a bit of interest of late.
Yep.
Looks like a good value opportunity potentially emerging there.
Yeah, well, Alan Joyce has done an incredibly good job, you'd have to say. Another off-market buyback. They're buying back $400 million of shares. It's quite an amazing statistic. Qantas will have 1/3 less shares on issue than when Alan Joyce started.
Incredible,
And, an incredibly profitable airline. But I think the crown jewel in the Qantas business is the frequent flyer program, which is effectively a technology business, but not being valued that way. Yeah.
Yeah, so good times for them. Just generally, as we sort of bring this insights to a close, in terms of what we've seen in the reporting season, stock like Event reported, asset-rich company that has, probably roundabout year lows at the moment. Some of the retail trusts that we've looked at in terms of the REITs offering good sustainable yields, 6.5%, this kind of thing. Value seems a little bit cheap, obviously, and growth quite expensive.
Yeah.
But it's value where really there is the opportunity now, Ben.
I agree. I mean, everyone wants growth. Everyone wants to be in a very small cohort of shares, and they're generally healthcare stocks or technology businesses. Yeah. And there's a lot of very good quality businesses that have really just treaded water for a number of years now, and are spitting out great dividends. And if you're finding the right ones, New Hope is another one. I think we both like.
Under asset backing, at the moment.
Yeah.
So when you can find companies like that, under asset backing, 6% franked income.
Yeah, pretty attractive.
Yes.
And with long-term owners, long-term CEOs in the seat, guiding them through maybe some patchier sort of times. You know, New Hope's got a weaker coal price. Sol Pats has got the TPG stuff with Vodafone. Event, you know, cinemas are a bit out of fashion at the moment, but the hotel side's good.
And looking at those REITs too, because, you know, they're basically solid safe. I mean, there's a bit of a theory that retail is on the nose and no good, but that's left opportunity in some solid REITs like Vicinity Centre, Centre Group. They look good, and even that Viva REIT, which looks good. So 6% on average is pretty good, Ben.
Trading at 15% discounts to asset backing. And, you know, the fact is that even if a couple of these properties don't turn out to be that economically good as a retail property, they can be transformed, as we saw with Bunnings Warehouse Property Trust when we were looking at that one a couple of years ago. Yeah,
with a few changes to them and to Masters. That was opportunity, in fact. So, look, there is certainly something in the way of yield that you can get, and we know how much yield is an issue for people in term deposits and cash at the moment, whether it be super or outside that. So by all means, give us a call and talk to us about that. Next week, we've got our last week of reporting. We'll bring you another Insights in. That's all for now.